In this video, we will look at Nvidia, ticker NVDA. Nvidia was down from close to 300 to 130 right now. So we will look at their recent quarterly report, we will look at their revenue, we will look at some of their numbers. So ultimately, we will try to decide if Nvidia is a good buy at this price level after the recent decline in price. So let's get started. First of all, if you have stock investment ideas or you want to make a deeper dive on any stock, please write in the comments below. Okay, Nvidia is a $300 billion company. It produces graphic cards, chips, and various software. If we look at their stock chart, we can see that the price was close to 300 in the end of last year, and now the price is 130. So the decline in price was due to overall market sentiment, but also a decline in gaming and cryptocurrency industry. So is Nvidia a good buy at this price level? If we look at the recent quarterly report, we can see that the revenue was 6.7 billion. So a very modest increase from 6.5 billion 1 year ago. Analysts were expecting for the revenue to be close to 8.1 billion. We also can see rising research and development and other expenses. So a sharp increase from the previous quarter. So ultimately the earnings per share was much lower than expected. So let's look further why there was such decline in the revenue. Let's look at the main segments of their business. If we look at the revenue by segment, we can see that the most decline was in their graphics segment. It is down 28% year over year and close to 40% from the recent quarter. So if we look at the revenue by market platform, we can see a sharp decline in gaming. So right after the COVID, when a lot of people stayed at home, graphic cards for gaming brought much more revenue. Also, there was a rise in Bitcoin prices. And right now we can see the reverse. We can see a decline in gaming and cryptocurrency sector. I believe that gaming and cryptocurrency are essentially the same segment. So graphic cards were used a lot for mining. I believe that right now the situation has changed. So I'm not into cryptocurrency, so please write in the comments below if graphic cards are still used for mining bitcoins or other cryptocurrency. While we saw the decline in their gaming and cryptocurrency sector, we can see that the data platform is up around 61% year over year. So this includes cloud-based solutions, which is a fast-growing segment. We also saw a sharp increase in the revenue of automotive segment. I believe this includes artificial intelligence for self-driving cars. Right now it represents a very small portion of the revenue, but it may change in the future. Okay, now let's look at some of the numbers. We can see that they have around 17 billion in cash and cash equivalents. They have 11.8 billion in long-term and short-term debt. So they have more cash than debt. This brings us their net debt to minus 5.2 billion. They are paying a small dividend of 0.12% and they have a very low payout ratio. So the dividend is very small but seems to be stable. They have very high return on invested capital of close to 22%. So according to these numbers, they definitely have a moat. Okay, this brings us to their valuation. First, we need the growth rate. What kind of growth rate can we expect from the stock? Management is expecting that the situation will improve in the next years, while in the next quarter, they even lower their guidance. So according to analyst projections that I was able to find, the growth rate in the next 5 years will be close to 23%, so a very high growth rate. Right now, the price to earnings, trailing 12-month price to earnings, is close to 42. The next 12-month price to earnings is close to 35. So if we take current earnings per share, we take the growth rate of 23%, and we take the price to earnings of 42, we get the future price of the stock of close to $377 per share. If we discount it back to today, I use the required rate of return of 10%, we get the fair value of the stock of close to $236 per share. So if the growth rate for the next 5 years will be close to 23%, the fair value of the stock is close to $230 per share, which implies around 80% upside. But this brings the question if the growth rate of 23% is reasonable. So if you believe it's reasonable, then the stock offers around 80% upside. But personally, I believe that the growth rate will be much lower for the next 5 years. So if we use the growth rate around 15%, as a result, we use lower price to earnings because the stocks with lower growth rate usually trade at lower price to earnings. So if we use the price to earnings of 30, we get that the stock is trading above its fair value, around 10% overvalued. If we use an even lower growth rate, the stock is overvalued even more. So the valuation is really dependent on the growth rate. Personally, I don't believe that the stock will grow 23% every year, so below $100, the stock may be a good addition to my portfolio, but at this price, I believe the stock is overvalued. Also, if you look at statistics, stocks with high valuation tend to do much worse than stocks with low valuation, low price to earnings, price to sales, price to free cash flow. So this is the table from the work of James O'Shaughnessy from his book What Works on Wall Street. So if we look at price to earnings, 11% compared to 2.5%. And as we can see for Nvidia, it is trading at a much higher price to sales, price to earnings, and price to free cash flow compared to the market. But again, this is for stocks in general. It doesn't mean that Nvidia will return 3%. If they're able to grow 23% every year, the stock offers a huge upside potential. Okay, in this video, we looked at Nvidia. I like the fact that they have high growth rate in their data center business, their cloud-based solutions. I like the growth rate in their automotive segment, AI for self-driving cars. What I don't like is their valuation. So if the growth rate will be lower than expected, the stock can fall even further. Also, if you want to know more about the recent purchases of super investors, here's the video. If you are not subscribed to the channel, you can do this by pressing the button right here. You will not miss a single new video. Thank you very much for watching till the end, and see you in the next video.